I'm Ekta Batra. With me is Manglam Malu as well as Sonia Shenoy. Well, it's turning out to be a day where we're really not talking about the indices, we're talking about specific stocks. And to drill down in terms of specific sectors, we can't talk enough about what's happening in the media space and the big deal which has taken place there. It's really momentous in the fact that at least there is some movement within that entire sector which has taken place. But nonetheless, besides that, we have a lot of other stocks to focus on. For example, Divi's Labs, in fact, has lost quite a lot of ground in today's trading session. There is a report, a brokerage report indicating some AGM takeaways. So maybe that's weighing on that stock. So down around 2% for that particular counter. Reliance on the back of brokerage notes is also in focus. And Adani stocks continue to be in focus, along with something like a TV today as well.
Oh, absolutely. So since Adani is the big story of the day, let's take that forward, right? The Adani Group has indirectly acquired more than 29% in news broadcaster NDTV. The Adani Group's unit has also announced an open offer for an additional 26% stake at 294 rupees per share. Now, this open offer will cost Adani almost 500 crore rupees. Yash, my colleague, has been tracking this closely. He's here with more details. Yash, first, if you can tell us how the deal is structured and what's next for NDTV.
So that's correct, Sonia. So first, I'll quickly speak about the shareholding pattern at NDTV itself. The promoters, Pranoy Roy, Radhika Roy, both together hold a little over 32% stake. Another promoter entity called RRPR held around 29% stake, and it's this 29% stake of RRPR that has been acquired by this entity called Vishwa Pradhan Commercial, which is a wholly owned subsidiary of the Adani Group. Interestingly, the announcement to acquire Vishwa Pradhan Capital also came just minutes before they announced the acquisition of RRPR's 29% stake in NDTV. Now, speaking about the deal structure, Vishwa Pradhan, which, as I said, is a unit of Adani Group, has converted warrants issued by RRPR to the company, which represents ownership of 29% stake in NDTV. Now, since Vishwa Pradhan Commercial is a unit of Adani, Adani gets an indirect holding of that 29% stake in NDTV. That's essentially the structure that has been panned out. As far as what's next, since it's an acquisition of more than 25% stake with voting rights of more than 25%, it triggered an open offer. This open offer would be for another 26% stake in NDTV, and the cost would be 294 rupees per share, which is about 25% discount to current market price of NDTV. What's in store for the Roys? Essentially three options. One is that if they feel it's a hostile takeover, they do have the option of going forward and contesting it on the legal ground. Second one, they can tender in their shares as far as the open offer is concerned and exit NDTV completely. And the third one is to co-promote NDTV with the Adani Group.
All right, hang in there, Yash. Ekta, usually this space was known to have not much news, but just the last 1 year, we've had the Zee-Sony announcement, we've had the Inox PVR merger, we've had a new sports player and the IPL auctions, etc.
So, Inox PVR is not directly indicative, I mean, of what's happening. I used to track this sector
many years ago. It's just that we don't realize
in the last 1 year
so much
activity
has taken place.
Yeah.
Yes, but Yash, you're still with us. Who are the bigger shareholders in NDTV, and what happens? Will they sell in the open offer?
Well, Manglam, if you look at the shareholding pattern, it itself gives you a very interesting story, and I'll speak about that. So, three sets of shareholders when it comes to NDTV, and these three sets are: one is Drolia Agencies, the second one is GRD Securities, and the third one Adesh Broking. These three have interlinked directors amongst themselves. I am not saying that this has to pan out the way I am explaining it, but the thought is that if one of this shareholder also decides to participate in the open offer, it's likely that all three would. And if that happens, approximately 6% of shareholding gets participated in the open offer straight away. The second interesting part is LTS Investments, which owns a large chunk in NDTV, about 9.75% stake. The same FII, that is LTS Investment, also holds stake in various Adani Group companies, be it Adani Enterprise, where they hold 1.7% stake, Adani Power about 1% stake, 1.6% stake in Adani Transmission, also 1.3% stake in Adani Total. It is, to one's assumption, that if they are holding stake in Adani Group companies, it is likely that they could participate participate in this open offer at NDTV also, which will help Adani raise its stake in the company. These two sets of investors, if they come together, that essentially takes Adani's holding in NDTV straight to 45%. So a lot rides on these two shareholders, and that was an interesting bit which came out of the shareholding pattern itself.
Okay, thanks a lot for that, Yash. Well, a very surprising, shocking to many, the method in which this takeover was done, hostile takeover, as many are calling it. Abneesh Roy, the Executive Director, Institutional Equities at Edelweiss Securities, joins us now. Abneesh, the big move has already come in the NDTV stock, right? I mean, it's up 280% in the last 12 months. Your view first on the stock, how does one approach it? And then on the deal itself.
Yes, thank you. Yeah, you're right that stock has moved up. In contrast, if you see Z and Sun TV have not done relatively that well. Of course, media industry has gone through extremely challenging times because of the COVID, then the advertisers cut because of margin pressure, which we think will recover in H2. Coming to this specific thing, there are three key points. I think this was expected that Adani would acquire someone. If you remember, they had set up this media vehicle a few quarters back, and then they acquired stake in Quintilion. See, media is extremely important, right? For such a large conglomerate, one of the wealthiest Indians, media is fourth estate in the democracy. So it's extremely important. And NDTV is one of the few players which is a credible channel. And of course, there was this issue of this stake, which was there, pledge stake, etc. So definitely, this is a logical extension of that. I think based on the comments by the founder, it seems that clearly this is not as per their knowledge, as per their approval. So need to see how things shape up in terms of founder versus Adani. But yes, the way things are panning out, I would expect that a lot of the investors, because of the up move in the stock price also, and because Adani obviously are far, far bigger conglomerates, I think Adani eventually should succeed, but we need to see in terms of approvals, in terms of how the founders react. That will be something interesting to watch.
What do you think would be the future, the course of action for the founders? That's point number one. And secondly, with the kind of rally that we've seen in the stock already, maybe some saying that, the street was anticipating a deal of this sort to come by at some point in time. Do you think the best is behind the stock of NDTV?
So if you see, this is not a very diversified company. So it has got just one very strong channel in the English space, Hindi extremely competitive. So yes, I would say that yes, the up move in the stock clearly is very different versus what you've seen in other media stocks. Second, of course, is this could potentially be negative for the listed companies like TV Today, because in news space, if Adani starts being the real promoter of NDTV, clearly it means completely different competitive dynamics for TV Today. So third, of course, is I would expect if Adani finally acquires this company, becomes the main owner, I think they will be not happy with just one or two channels. They will like to scale it up to regional news channels in a far bigger manner. So those could also see some M&A, some launches, etc., which was missing, right? So yes, media is an industry where disruption will keep happening. So consolidation in stronger hands will keep happening. But we also need to see whether Adani will be happy with just news, or eventually they will do GECs also, because just having news longer term, I don't think it makes too much of sense. But yes, GECs is the big revenue opportunity, longer term.
Abneesh, you've looked at media for years now. You look at FMCG as well. From an investment standpoint, Abneesh, despite this deal taking place, would you be recommending to your clients that, yes, media is a place to get into for long-term returns? And if so, which stocks?
Sure. So yes, media is extremely important for any Indian consumer. The good part is we have got most of the large entities, PVR plus Inox, becoming very large investable ideas. Similarly, Sony plus Z also. So I would say, unlike say FMCG sector, media is going to see far bigger disruption. So there will be periods where the stocks don't do well. But taking into consideration valuation and the potential mergers which are happening, we will continue to prefer Z Entertainment and PVR from a relative basis, because in Q2, most of the movies have not done well. PVR and Inox could underperform in the very near term. and Z could see much better H2 because FMCG companies will ramp up advertising. But from a structural perspective, PVR and Inox will become extremely monopolistic kind of a standing. Of course, there is competition, but yes, they will completely dominate post the merger.
Okay, but
Long-term,
Avnish,
yes,
my
PVR
point is that would media become a sector which would be a long-term portfolio investment? Say from a 10-year horizon, it's in your portfolio and you forget about it. Is the sector that kind of an investment profile for you?
So it's definitely has much higher risk, but the good part is companies like Z or even TV18 and all these companies are investing into the future also. So they are investing in OTT. So it's important to see these companies as a content creator rather than a broadcasting channel or as an OTT. That's very important. So someone like a Sun TV will be much lower in terms of pecking order because their aggression in OTT is far lower. Someone like a Z and Sony will be having sports, will be having movies, music, plus the TV. So I think good to go for diversified. But as I said, the risk in media is high. But yes, from a 5-year perspective, both PVR and Z can make a lot of money given the valuation and given the merger benefits which will accrue.
So, since we're talking about 5-year perspective, right? What's your view on NDTV for the longer term? Okay, now this news has played out. And perhaps the news is in the price for now. But as you rightly pointed out, I mean, such a large conglomerate acquiring a media company, it's having it as its fourth estate is in a way prestigious for them as well. They would like to grow it in a certain way as they have done other businesses. Do you think the long-term scalability and of course, at the same time trying to dwarf competition too, do you think they'll be successful in that and scale this business to new heights? And if yes, from a slightly longer-term perspective, does it still make sense to get into a stock like NDTV?
So 3 things. We don't obviously cover this name NDTV. But yes, if I have to give my view, the stock has run up a lot. So we need to be careful on that. Second bit is if you see the listed news companies like TV today have not really created that much wealth over a longer term perspective because news is far more fragmented, unlike GECs. So yes, if NDTV in the longer term again has a GEC, if you remember, they had got this GEC, then they spun off and all that. So yes, for real wealth creation, news is not enough because it's extremely fragmented. Good for the large conglomerates, but is it good for the minority shareholder, medium long term? I would say that GEC is extremely important.
All right. As employees of a news channel, we'll only be happy that, if it is good for investors from a long-term standpoint as well, that would, keep us longer in the business too. But Avnish, let's move on to a lot more stable sector, and I'd request you to wear your FMCG analyst hat. The second half of this year, everyone's hoping that, gross margins will expand. The question is that will that gross margin expansion flow through to the EBITDA margin as well or not? Because come second half, companies will have to, like you said, from a media standpoint, increase their ad spends, increase some of the activities that they had curtailed during the pandemic itself as well. And then there would be higher competitive intensity because now prices would come down uniformly for a lot of the players in the market. So does that mean that EBITDA margins will still take a while for all the FMCG companies to recover?
No. Yeah. Thanks, Mangalam. Good question. EBITDA margins will clearly improve in H2. Case studies, tea companies, for example, Tata Consumer, if you see, has already played out in the last 1 year. Yes, advertising spends will go up in H2, but please note, small regional companies don't come back very quickly. So they may come back, say, after 3-4 quarters in terms of advertising spends, but such companies have not made much profit, so they will not come back in terms of advertising. H2 versus H1, Z will see very good recovery. But will it go back to pre-COVID level? No, it will take at least 1 year or maybe even more to go back to the pre-COVID level in terms of advertising as a sales percentage. So yes, in H2, essentially, wherever palm oil related input is there, soaps, biscuit, noodle companies, we will see gross margin expansion. And my sense is around 60% of that will flow to EBITDA margin expansion. May not be true for Godrej Consumer because Godrej Consumer has said they will ramp up advertising far more, but most other companies will see that benefit. And
since you spoke about Godrej Consumer, Avnish, a couple of other companies which have management changes which will play out over the next couple of months. We will have Colgate, Prabha Narasimhan joins in, and Jubilant Foodworks as well. Both of them, what are your thoughts on these stocks?
Yeah, you're absolutely right. A lot of management changes happening. We will prefer companies in which diversified play is there. So if I compare Colgate versus say GCPL, clearly GCPL is far more diversified. So I'll prefer that. I'll prefer Dabur, for example, where no management change is happening, but more diversified. Similarly, in Jubilant, if you see, because now in-home consumption has taken a back seat, there is more competition by Devyani, Sapphire, and all those also. So I'll be a bit cautious in terms of pecking order. I like Jubilant Foods, but yes, because in-home consumption and more competition, slightly it will be lower in terms of pecking order.
So what are your top picks now in the sector as a whole from the entire basket of stocks that you track?
Sure, thanks. So there are two key things. One is the rural recovery in 75-80% of the states. There is going to be a rural recovery in H2 starting and FY24. There is a problem in UP, Bihar, Jharkhand, Bengal because there is a deficit in terms of rainfall. On an overall basis, rural recovery should start for most of the companies. And second is the raw material deflation, which is going to happen. And third is the market share. Based on this, I like Hindustan Unilever, I like Asian Paints, I like Titan. These 3-4 names will be the top picks. Apart from that, I continue to like someone like a Britannia and even Nestle.
Oil is back at 100, Abneesh. Asian Paints you still like?
Yeah, it's more from a longer term perspective, because if you see the market share gains which are happening, diversified play. Of course, if crude goes up, there could be some near term underperformance. But yes, I do expect that in second half, we will see very strong number. Only thing in paints, because you have asked, in Q2, because of very high rainfall, there could be some postponement of demand which can happen to paint companies in general.
Okay, all right, Abneesh, and I'm assuming that you prefer FMCG from a 5-year perspective over media.
Correct, that's true.
All right, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's Edelweiss Securities giving its comprehensive view on media as well as FMCG. We need to take a short break, but up next we'll put the focus on global pharma major Abbott India and GSK India. So a lot of these pharma MNCs in focus on account of brokerage notes, all that and more on the other side. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. Well, for now, for the market, it's not doing too much, to be honest. Very quiet, just like ambling within a 50-100 point range, and now absolutely flat, like 0.07%. So let's track some stocks. The MNC pharma stocks, Abbott, GSK Pharma, are in focus today. Ekta, why is that?
Well, there are brokerage notes, there are management meets which have taken place within this entire space. So that's the reason I'm tracking it. So I'll start with CLSA, which is written on Abbott. Say they have a buy rating. The target is raised to around 22,510 rupees on that particular stock. They said that they've delivered double-digit growth in FY22 despite no COVID-19 product in their portfolio. The company is seeing incremental competition for one of their key brands, which is basically called Dufiston. And focus is now on introducing new key therapies, which should support medium-term earnings outlook for Abbott. They've tweaked their EPS by around 1 to 3% on higher SG&A costs, which is basically selling and general and administrative costs. Now, GSK is also in focus because they held an analyst meet, and a couple of key takeaways is that the company overall gets around 78% of its business from prescriptions, 22% of its sales from vaccines, and remember that they're very big in the vaccine space. The prescription business is skewed towards the acute segment, which is basically cough, colds, etc., which is 95% of their portfolio. And the prescription business, which is basically acute focus, is expected to deliver strong growth in Q2 of FY23. The company is also guided to around 8 to 9% price hike in FY23. Future levers of EBITDA margin expansion are around, according to them, based on growth in promoted brands, new launches, cost-saving initiatives, improved productivity within all of their market reps. But the main pain point is the vaccines business. So a pickup in the vaccines business will be interesting to watch. Remember that a lot of people actually delayed taking vaccinations because of COVID-19, and there was some amount of apprehension with regards to that as well. So once the business normalizes, hopefully it should grow for GSK as well. Morgan Stanley is written on them. They say they have an underweight call and the target is 1416. They say it's rich valuations and relatively lower growth profile keeps them underweight. But Manglam, you're tracking a stock.
Well, I am tracking a stock, but before that, I remember on the MNC pharmaceutical space itself, back in the day, you would tell us that domestic pharma is separate, but MNC pharma should be treated as a FMCG.
As an FMCG company,
because they have
the brands are
yep.
stronger and you know, the Crosons of the world and the Augmentins of the world, all of them, Calpol.
And the way we pop these medicines now, it's almost become like FMCG.
Yeah,
right?
and
I mean,
then
you go out there, you get OTC medicines, and I think you sometimes pop it more than these vitamins and.
Most
No, but
definitely
the
you do that,
debate
but-
for Dolo 650 was exactly on that, because I spoke to a lot of people within the industry, and they said that the brand itself was so strong in the 650 mg segment of paracetamol that it just became strong word of mouth, and this is keeping the allegations of freebies aside. We're just talking about how the brand
is
grew
strong.
during COVID-19.
And it so happens that at times, you know, if a pharmaceutical company has an extremely strong brand, which it cannot scale up, an FMCG company goes ahead and acquires that. That's what happened with Horlicks. But Affle India, that's the one, Sonia, you're tracking. Goldman Sachs has written on that?
Yes. So, you know, Affle India, as we know, is a technology company. It offers a consumer intelligence platform that delivers recommendations, consumer conversions, etc. through mobile advertising. So, basically, it's mobile advertising for several brands. Now, Goldman Sachs has initiated a coverage on that stock with a buy rating. They have a target price of $14.95. Now, because Affle India is into mobile advertising, they say that the rising usage of the internet, the smartphone, e-commerce penetration will definitely benefit Affle India in the longer run. They expect Affle India's revenues to grow by 32% compounded over FY 22 to 25. And Affle India has multiple moats, whether it is patents, a first mover advantage, a large platform in a market like India. And they are focusing on high growth categories, you know, categories like e-commerce, education technology, food technology. So that's the reason why Goldman Sachs is extremely bullish, and they believe that the earnings are only going to get much better from here because of the rising internet and e-commerce penetration across the market like India.
All right. That's about Affle India, up about 3% today. But over the last few trading sessions, we've seen a big move on that one as well. Chennai Petroleum is the other one in focus, up and about in today's trading session. A joint venture with IOC and a couple of seed equity investors. Sonal?
Oh yes, it is a positive news because it was a long pending capex that the company had earlier announced, and now the funding has come through for them. As you said, the board has approved a joint venture with IOC and seed equity investors. The JV will form and implement that 9 million metric tons of refinery project in the Kaveri Basin, and the total amount for this capex is 31,580 crore rupees. So there is some escalation in cost as well. The seed equity investors include the likes of Axis Bank, you have HDFC Life, SBI Life, ICICI Pru and ICICI Bank as well. And board has also approved equity investment from Chennai Petroleum in the JV to the tune of 2,570 crore rupees. The stock is not only doing well today, it has been an outperformer through the course of the year and this month as well. On 13th August, company was allowed to resume production to 100% by Tamil Nadu Pollution Control Board, because earlier they were asked to cut it to 75% of their total capacity. So the increased production definitely comes as a positive. As I said, the stock is up 12.5% this week. It's up 210% this year itself. So has been a big outperformer as well.
Okay, well, Sonal, tell us more, because you're tracking crude prices and the fact that they've rallied back to $100 per barrel.
Not only we are about media stocks or FMCG or pharma stocks for that matter, Ekta, it's a lot about what's happening in the oil and gas space as well, right? Overnight, we saw crude prices crossing that $100 a barrel mark because Saudi Arabia hinted that there could be some production cuts as well, and that is the reason crude oil prices, they surged 4% in overnight trading session. That is about crude oil prices. Even gas prices, look at the way they have surged. They were up 13% in the European region in the overnight session. They are at a record high level. European gas prices up anywhere between 500 to 700% this year itself. If we talk about what's happening with the spot LNG prices, even they are at a record high levels at $57 per MMBTU. That is in the Asian region. And one of the reasons why we are seeing this surge is because of the supply constraints because of Russia-Ukraine war. There was additional damage to a key pipeline into Europe, and that is the reason there's a fear that supply could be crunched further, and that's why this move on gas prices as well.
I guess as we head into the winter season, there is this major demand boost, right? So now there'll be a demand crunch, rather supply crunch because of the higher demand, and that seems to be the reason why. I mean, as Sonal was saying, 300 euros per megawatt is a record that we've seen in terms of natural gas prices in Europe, and it's been hitting a lot of companies in India as well. So, for example, auto ancillary companies have huge exposure in Europe, whether it's Motherson Sumi, Bharat Forge, or even something like a Endurance Tech, and they've been telling us how escalating costs in Europe is something that has made their business quite unviable.
And surprisingly, even API companies, because one of the key ingredients for them is steam. So they are also impacted very, very badly with higher gas
higher
prices. So that's why you're seeing a lot of the margins crunch down in the previous quarter.
Not so much for the domestic FMCG companies, but a lot of the companies that are exporting, etc., they're scaling down their Europe projections as well because they believe that maybe there would be a wee bit of a recession or, you know, some sort of crisis out there, because the per capita spend will reduce given, you know, the kind of money that they will be spending on energy, etc. So the disposable income that they will be left with will be much lower to spend on other things, you know, for people to entertain themselves, etc.
Of course.
So
that's a big, I guess, the overarching story. But we'll keep it with the oil and gas space. IGL is another stock on our radar. Earlier today, we caught up with Pawan Kumar, who's the director commercial for the company. He said that they are getting lesser gas than what was allocated earlier by the government. Listen in.
Allocation has in fact decreased for IGL. Earlier we were getting around 6.5 million per day, but now it is around 6.06. So allocation has almost come down, but it has benefited IGL because earlier we were getting pooled gas at a higher cost, which was around 10.5 to dollar per MMBTU, but now the weighted average cost is around $7.50. So it has significantly helped IGL to bring down the input cost. We should encourage the customers and the general public at large for buying CNG vehicles, and we encourage them for conversions so that we have a bigger market. So we have a long-term view so that we don't lose the customers. So since we didn't increase the prices, so we are not going to reduce. As of now, we don't have any room for price cuts because we are absorbing whatever hike we absorbed, we are compensating that now.
Okay, well, on that note, it's also a little bit of a pickup in the markets. The mid-cap index is up around 0.2%. The bank Nifty is outperforming a tad bit, so up around 0.3% for all the financials. We'll, in fact, talk a little more about the technicals once we're back. Sudeep Shah of SBI Securities.
holding mildly in the green for all the frontline indices. The Nifty Bank doing a tad better with a gain of almost 140 odd points. Not bad given the sort of uncertainty that we're facing in global indices. At the same time, you know, the kind of rally that we've seen in the past as well. Sudeep Shah, who is the head technical and editor research at SBI Securities, joins in now. Sudeep, what are your thoughts? This 17,600, 17,700 could be a bit of a resistance zone as we move into the expiry tomorrow?
Yeah, good afternoon, Mangalam. See, it could act as a resistance, but we feel that the overall trend is bullish. And now, see, we have to see this in a larger context. Like we have seen the move starting from 15,800 all the way from 15 July till 18,000 on 18th August now. So it's almost post that touching 18,000 zone, it's almost 600 points correction, which is 23-25% retracement of the entire move. And yesterday's low of 17,350, 17,400 also is an important zone, which is the 21 EMA, which is a crucial short-term moving average. So hence we feel that we could see some consolidation for the next couple of days. But 17,350, 17,400 will be a very good zone to accumulate stocks and even go along on the index. Until this zone holds, we feel that the upside, we could inch back closer towards 17,850, 17,900 post-expiry.
What about individuals?
Also,
Sure. Sudeep, what about individual stocks? So what would some recommendations be for the rest of the day or even a positional trade?
Yeah, so we have a couple of positional trades now. We like, if we see sectorially, we like auto and PSU banks that would outperform in the next few sessions. So the first one is M&M. Now this stock, Mahindra & Mahindra, has been in a continuous uptrend, forming higher tops and higher bottoms on medium-term charts since last 4 or 5 months. Every time this is testing its 21 EMA on daily charts, we are seeing a fresh up move of 13 to 15% from that particular zone. Yesterday also, it has rebounded from that particular 21 EMA of 1230, 1235. So, and it is showing strength with a rise in open interest on the long side now. So that also the pre-roll trends which are indicative now, that is also showing that the stock can further witness some additional strength in the next few sessions. And we feel that with a stop loss of 1235, we can see potential targets of 1330, 1345 on the upside for M&M.
Okay. Sudeep, I just wanted to ask you about RBL Bank, whether you would have a view on that. That stock is done quite well this week. At current reckoning, it's up around 10.5%, up 6% today. But, you know, it had seen highs of around over 150 odd rupees earlier in this year. Do you think that it has the ability to retrace back to those levels? What would your call be?
Yeah, see, what has happened with RBL Bank is that prior to today and yesterday, it was consolidating in this 95-100 kind of band, and post that it has broken out with good volumes on the upside. So we feel that this trend could continue, and also with RBL Bank, it's not only with RBL Bank, it's with City Union Bank, it's with Federal Bank. All these mid-sized private banks are seeing some kind of a positive traction. And we feel this move could continue. So if someone is holding, if a trader is holding or an investor is holding, we feel that 102, 103 now should act as a very good stop loss. And on the upside, we could see the stock initially moving towards 128, 130, where the 200 DMA is placed. And sustaining above that, the trend could accelerate further on the upside. But at least till 128, 130 levels is what we are eyeing in this current up move.
Okay, all right. Thanks a lot for that. Well, those are some ideas from SBI Securities. Let's do one thing. Let's cut across to the launch of the Mercedes AMC EQS 53. So that's like a new launch from Mercedes. Okay, we'll go to that in a bit. I got excited.
Will you buy?
I was going to ask you guys.
No, not at all. I read the M letter and I was like, no, can't afford it.
Achha, what is the price band? Is it a hatchback? Is it an SUV? Tell us something.
So now we know who's interested to buy
so
Mercedes, right?
you know, if someone asked me what the price band of a Mercedes is, my answer would be unaffordable.
No, I'm just interested in all price bands.
Okay.
So, yeah, you were also interested in the K10. And to be fair, you know, some of these cars like the K10, I think are better options for the Mumbai roads.
Absolutely.
Because you can just zip
McLaren
around.
said that they will launch in Mumbai. The first store would open. I'm sure that, you know, one of those cars will splinter around if they encounter any of these speed bumps or the potholes that we have. What a beautiful machine.
By the way, this AMG EQ that's being launched is an electric sedan.
Oh,
okay.
It's an electric vehicle.
But do you see as much traction for electric sedans, electric cars?
Right now, to be honest, I wouldn't
really
buy an electric car because I think charging
the infrastructure is still not there.
developed.
And the people who are buying Mercedes don't care about the petrol prices anyway. I mean.
I think maybe 3 to 4 years down the line is when you'll probably see that traction for EVs much more than what it is now. But we'll wait by for the Mercedes launch.
And the price
I was trying to get what the pricing is, but guys, just to tell you, the pricing is not out. But be ready for this. It's upwards of 2 crores.
Okay,
That's
so then...
So maybe the K10 it is, the Alto it is for all of us, right?
I'll probably do much better with the interest of that 2
We'll
crore.
need a crowdfunding for the car if anyone needs to purchase it.
Okay.
Yeah, in case you wish to contribute to Ekta's Mercedes buying fund, do write to us.
Okay, and the funniest part will be if you buy a 2 crore car and then you don't have a charging point.
That's what. So
Okay, guys. Well, that's chatter for another day. Let's do one thing. Let's slip into a quick break. A reminder for our viewers, it's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our time report. Well, almost 8 months after the Vodafone Idea board approved converting dues on account of AGR payments and interest to government equity, the conversion is yet to take place. Sources say that even though the Finance Ministry has given the go-ahead, a final nod is awaited from the market regulator. Ashmit, my colleague, is here with all the details. Ashmit, over to you.
The government had pitched the telecom relief package introduced last year as a catalyst for turning distressed telecom sector into a sunrise space. Now, while the industry has showered praise, one key component of that relief package is yet to take effect, even as we near nearly 12 months since that cabinet nod. Now, that key component has been the scheme allowing telcos to convert interest on deferred spectrum payments and AGR dues into government equity. Now, Vodafone Idea opted for the same scheme on January 11th of this year, 2022. Now, the net present value of interest dues would add up to a little over 16,000 crores. However, nearly 8 months post Vodafone Idea's decision, government is yet to convert outstanding dues into equity. Now, this equity conversion would turn the government into the telecom company's single largest shareholder as of Jan 2022. That would translate into a holding of 35.8%, which is higher than either of the two remaining promoter groups. Now, this was anticipated to be a long-drawn process. Any such conversion would require the nod from the Finance Ministry. Vodafone Idea is listed, so it would also require the SEBI nod and finally the approval from the DoT. Now, in March, Vodafone Idea had pleaded before the government to fast-track the conversion process. The company had claimed that it's in talks with various funds for raising funds, in fact, and that equity conversion would help in mobilizing them. Now, at the time, the company was seeking to raise as much as 20,000 crores from promoter groups and external investors. Now, with little movement in April or May, government sources revealed in the month of June that the equity conversion may be completed ahead of the 5G auctions. Now, we had learned at that time that due diligence had almost been completed and that SEBI's final approval is awaited. Now, in July, Finance Ministry granted its nod, pointing at a possible conversion prior to the 5G auctions, but the auctions began as scheduled on July 26th, with still no movement. Now, while the auctions were underway, the telecom minister revealed that technical issues had come in the way and that conversion will take more time. So, are there concerns that the government has on its mind? Well, the company has admittedly struggled to raise funds for its operations from either external investors or the promoter groups. The telecom's customer base has also been bleeding, has been eroding, with lakhs porting out almost every month. And these concerns are taking a toll on the company's finances with mounting losses. Now, speaking of the subscriber base, the first half of 2022 alone has seen the company lose over 88 lakh subscribers. The 12-month period ending with the month of June 30th of this year saw Vodafone Idea lose as many as 1.66 crore customers. And for the 15-month period beginning 1st of April 2021, the company saw over 2.7 crore customers porting out. In fact, the last time the company added subscribers was way back in March of 2021. Now, expectedly, the financials are nothing to write home about. Since the merger, the cumulative losses are pegged at 1.68 lakh crore rupees. The subscriber base has fallen from 422 million to 240 million. That's down by 43%. Meanwhile, the total debt has crept up to nearly 2 lakh crores. Now, the effects of this was visible in the recently concluded 5G auctions. Vodafone Idea's total bid of about 18,800 crore rupees looked bleak against Airtel's bid of 43,000 crores and Jio's bid of 88,000 crores. Now, the nearly 8-month delay in government action is at odds with the recent pace that has been shown by the DoT in execution of spectrum auctions and the fast pace of assigning spectrum to the telecom companies. Now, while the government leaders continue to cite issues, no clarity has emerged on the nature of such issues and the possible timeline for execution.
Okay, all right, Ashmit, thanks very much for that comprehensive report on Vodafone Idea. So 43% decline in subscriber base, and you can see that the debt levels have risen significantly for Vodafone Idea. Take a short break, but on the other side, we'll be discussing the top loser on the Nifty today, Divi slabs.
स्टार्टअप हैं तो लॉन्ग वर्किंग आवर्स आर नॉर्मल, बट इन्वेस्टिंग दैट डजंट टेक टू लॉन्ग। एंजल वन पर क्विकली इजीली अकाउंट ओपन करो। ये चाय ठंडी होने से पहले यू कैन स्टार्ट इन्वेस्टिंग।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
अबे, मेरे लिए कुछ नहीं बचाया। बचाया ना। सिस्का BLDC फैंस ने 60% पावर बचाया, पैसे बचाए, प्लैनेट बचाया। BLDC मोटर, more savings, more powerful, more eco-friendly. अबे तुम बचाओ। सिस्का फैंस, light years ahead.
सिस्का।
नहीं मूर्ति, कोई फायदा नहीं अब। मूर्ति, कोई जरूरत नहीं रही भाई।
नई कार खरीदने से पहले एको इंश्योरेंस कंपनी चेक करे और 50,000 तक बचाए।
मेरी कार का कितना मिल जाएगा?
यस सर, OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस।
क्या बात कर रहे हो?
यही कि OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। ये प्राइस नहीं, सरप्राइज है।
क्या बात कर रहे हो?
Visit olxautos.in now.
चाहे खरीदना हो अपना घर या हो रिटायरमेंट के लिए फाइनेंशियल प्लानिंग, मुझे फ्यूचर की कोई चिंता नहीं, क्योंकि मेरे पीछे SMC है।
SMC, money wise, be wise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. It's that kind of a market where the previous time we opened back from the break, we realized that the Nifty was high by about 10 points and now it's low by about 7 points. Nothing really, in terms of a big move on either direction, but absolutely flat. Though Grasim is one of the stocks from the frontline space, which is currently at the high point, and we do have a few stocks which are doing well as well. But among them, Divi is not one of those. Kotak Institutional Securities has come up with a note on Divi. Ekta, what do you make of it?
Well, it's definitely negative for Divi's Labs. You can see that the stock is down around 1.7% as we speak. Now, the AGM highlights is what Kotak has mentioned. They've said that Divi's maintained their optimistic outlook, which was aided by several projects related to 6 growth engines going on stream in the next 2 years. But Kotak believes that the recovery in the generic APIs is unlikely to help bridge the gap from lower molnupiravir sales. Remember that molnupiravir sales as a whole have reduced because COVID-19 as a whole has reduced, and the company during Q1 had indicated that as of now they're waiting by for more details about orders when it comes to molnupiravir. Estimate of Kotak estimates around only a 2% EPS CAGR over FY22 to FY25. This is despite recent correction in the stock. The valuations remain elevated according to them. Divi's is witnessing a lower D rating versus its global peers in FY22. They have a reduced rating and an unchanged face value of around 3475. Now remember that the stock itself has corrected around 36% from its 52-week high. This is just to give you a sense in terms of the kind of underperformance that we've seen for Divi's. And from Q1 FY23, when they released their Q1 FY23 numbers on the 12th of August, the stock has corrected around 12-odd%. It's only about 3% away from its 52-week low. So that's the kind of stock underperformance that you've seen for Divi's. It's trading at around 31.5 times FY24 PE. And this is versus elevated valuations or peak valuations in the past 1 year of close to 50 times.
Okay, so that's on Divi's Labs. But let's get you some global opinion as well. Mark Matthews of Bank Julius Baer, he was here with us in the studio today. He says if this inflation remains high in the US, it's likely that the market could expect a 100 basis points hike from the Fed. Listen in, Business Lunch will take all the action ahead.
If you aggregate all of the central banks and what they've done over the last year, they've tightened more than in any time going back 50-odd years. And that leads the purchasing managers' indices. Central bank tightening or loosening leads the PMIs. So we shouldn't be surprised that they are below 50 and they are going down. The global economy is slowing down. And I don't think a month or two ago, if you'd told anybody that was going to happen, they'd be surprised. A very important number will be both the PCE inflation reading that comes out half an hour before he speaks, and then the CPI, which if it's a hot number, then I think people would price in 100. If we have a recession, the market will go back and test its previous low, possibly even new lows. That's what history tells us. If we look at the average of bear markets since World War II that were accompanied by recessions, you had an initial bounce like the one we had of about 20% or so, and then it fades. If we don't have a recession, then I think we'll keep going higher, possibly not in September, as I said, but over the next 3, 6, 12 months. My hunch is that will be the case because I think the labor market is just too strong to have a recession. If it is, it'll be extremely mild. The dollar is so strong, and you don't tend to see global investors buying emerging markets in a strong dollar environment. And my sense is that the dollar will ultimately hit 110. Well, we're not far from that. But until that happens, I don't really see big foreign inflows here.
All right, we will take the short break now, and on the other side, we'll get some more interesting data on average remuneration for heads of Nifty companies which surged.
Welcome back. Well, data suggests that the average remuneration for heads or chiefs of Nifty companies surged to a record high in FY22. Sonal is here with the details on this story.
As per this interesting data, which is compiled by my colleague Yusuf, the average remuneration for the heads or the chiefs, as you mentioned, of the Nifty 50 companies surged to a record level in FY22, that is at 28.4 crore rupees. And it's not only professional-run companies that top the list. Even promoter-led companies like Divi's Labs and JSW Steel, they saw aggregate compensation of 140 crore rupees. Now, the average compensation in FY22 was up. We saw a 3-4% growth out there. And between FY18 and FY20, the average compensation, it averaged around that 17 to 18 crore rupees. So from there, it has come into 28.4 crore rupees. Now let's get down to the names. Who really got the most amount of money? HCL Tech's boss, C. Vijay Kumar, was the top paid professional. Also because this included a long-term incentive from a subsidiary to the tune of $12.5 million. In the highest paid MD and chairman category, it was Sajan Jindal, and this was due to profit-linked commission of 121.7 crore rupees because of high profitability for the company. Wipro's CEO was the second highest paid head, that is in the Nifty pack, with an annual pay package of 79.8 crore rupees. For some of the IT majors, let's talk about them now. Salil Parekh of Infosys drew compensation of 71 crore rupees, CP Gurnani of Tech Mahindra drew compensation of 62.7 crore rupees, and Rajesh Gopinathan at 25.8 crore rupees. The compensation, of course, includes salaries, bonuses, stock options, incentives, and other rewards paid during the year as well. The four IT firms, X of TCS, along with Divi's Laboratories, JSW Steel, Hero Motocorp, and Shree Cement together account for 56% of the combined Nifty 50 remuneration of 1,419 crores in FY22. Other companies which saw doubling their CEO's compensation include L&T, Maruti Suzuki, Grasim, Apollo Hospitals, that is the company there. On the flip side, ICICI Bank, Kotak Mahindra Bank and HDFC Bank from the banking pack, they saw their CEOs taking lower remuneration than what they earned last year.
Well, thanks, Sonal, for making us feel really bad about,
our
what we're doing.
Would be perhaps a rounding error in this number.
Okay, well, I mean, it's endless, right?
Yeah.
Greed is endless. That's the only way you can make yourself feel better.
Well, yeah. Thank you, Sonia. We'll come to your spiritual classes now.
And thanks, Sonal, for making all of us feel great today this afternoon. Well, on that note, we're going to wrap up with this edition of Halftime Report. But don't go anywhere. Business Lunch coming up next.